Now let's take a look at how our markets ended this week. And we'll start with the smallest market, which is the NASD OTC, where unlisted securities are traded. USI, which is the unlisted securities index on that side of the market, came in at 599.94. Recall that a few weeks ago that markets crossed 600 psychological line, but this week it ended by 1.06%, which means it is gravitating back northwards. The market capitalization came in at 406 billion naira, while the volume, value, and deals of the year-to-date performance show right there. Let's move over to the fixed income market, where we have bonds tradable and the Nigerian FMDQ OTC. We have the 5-year, we have data for the 5-year and the 10-year numbers. For the 5-year, you have the coupon rate of 14.50% for the FGN bonds July 2021, which this week appreciated by 31 kobo, and the one for 10-year appreciated, that is January 2022, appreciated by 37 kobo, giving us the yield 14.77% for the 5-year bond which we have, and for the 10-year bond it's 14.89%, all the way from 14.77%. And fast forward to what is going to be happening sometimes next week, which is the FGN bond auction reopening for two major papers, the 5-year and 10-year papers as well. Coupon rate is 14.50% for the July 2021 paper, and coupon rate for the 10-year, which is 16.28% for March 2027, will both be reopened on October the 25th, on the that's for in terms of auction, and the amount the federal government is looking at raising for each of these papers is 45 billion to 55 billion naira each. Now let's take a look at what we have in terms of the equities markets, the dominant instrument in the Nigerian capital market. All share index for the Nigerian Stock Exchange this week came in at 36,587, having lost 0.71% this week, and market capitalization remained at 12.59 trillion naira territory. Total volume of traded securities was 872.89 million, while total value came in at 14.01 billion naira, and of course total deals is put at 19,047 deals, I beg your pardon. Banking sector, consumer goods sector, as well as the insurance and industrial goods, oil and gas that we trail, came in very, very negative, except for the banking sector that notched 0.03%. Now let's move on to the earnings which trickled this week, and we'll be joined by Shino Olubu, who is the head of research at GDL Asset Management Limited. Thank you very much, Shino, for joining us on the program. But
thank you for having me.
Great. So earlier in the week, we saw quite a number of earnings that came in, and we know we have that of Zenith Bank, we have got Dangote, we've also got Forte Oil, which actually came in last week. Then we have Lafarge coming in this week. I think quite a number of them came in this week. Most of them came in this except for Forte Oil. Now let us look at Zenith Bank, or generally, let me even ask you, what do you make of all of these earnings that trickled in this time? First, we know a company released a report yesterday, AfroInvest, which was talking about how the Nigerian banking sector was able to improve by 16.04% in the year 2016 alone. So now that we're beginning to see a lot of these earnings from the banking sector ushering in the ending season, so to say, what have you analysts seen so far?
Thank you so much. Without mentioning any stock in particular just yet, I'd like to talk about the general reaction of the market to these earnings. Now, if you look at the figures on the face of it, I mean, for a company to be posting 50% growth in bottom line, sometimes almost 100% growth in bottom line. In the case of Forte Oil, ordinarily, before now, you could have seen a massive reaction, massive positive reaction by the market participant, but that's not what we have seen. As a matter of fact, instead of the market to post gain, we saw a decline of 0.71%. That's because this week alone. That's because the investing public have been able to see beyond the numbers. They look at what make up the numbers. Why they look at the top line. They look at the figures before tax, the figure before items that are exceptional and extraordinary, I mean, as the case may be. So, for example, in the case of Forte Oil, if you look at the
number
before tax, you find out that it's almost flat. It's about 5 billion, like the return.
5.58 billion.
Now,
We've got those numbers.
Except for the tax savings that they got from Geregu and power plants and the Campero power plant, because of the tax exemptions that they got from it. Were it not for that, we have seen a flattening of bottom line in the case of Forte Oil. I don't know if you want me to talk about the banks.
The banks. In fact, I was going to look at how Zenith Bank, which has a gross earning of 40% and PBT or net interest income of 6%. I mean, a lot of the indicators look positive. But one thing that amazes me most is the NPL ratio, which actually moderated, I think, around 47. Is it 10 basis points quarter on quarter? So give us a sense of what this means generally for that bank and for the investors that have stake in it.
Except for GT, that had like about 5% drop in their top line, in their gross earnings. You find out that Zenith Bank and UBA posted some growth in both their gross earnings and their PAT. Now, if you look at the composition of the gross earnings and the things that brought about the growth in gross earnings, you'll find out that it's not basically based on the core conventional banking model, which is creation of risk assets, financial intermediation. That's not what it is. It's basically from non-interest income. In the case of Zenith Bank, you see the drivers of gross earnings being fees and commission. If you break it down, you see charges that they got for maintenance fee, and then you see what they got from their electronic products. Now, if you go back to trading income, you see things like what they get from T-bills and what they get from FX. And the story is not different. If you look at it across the banks, the question is this: what if we succeed in terms of implementation of ERGP? Which is aimed at changing the narratives from the banks getting money, free money, I will call it, from just placing money in risk-free instrument, going into the FX market to just get money.
So they basically need to start diversifying.
They need to rejig their business model. Otherwise, by the time some of these things happen, it's going to spell doom on them.
Okay, let's look at the numbers for Dangote Cement. I mean, that's the major cement company in Nigeria. Revenue came in at 37%. That is 603.57 billion naira. It has a strong EBITDA of 65% and profit after tax of 48%, which is profit after tax of 193.13 billion naira. That's 45% actually increase over what was recorded before. So let's focus on how the company has now been able to diversify its source of fuel. It's been looking into coal, gas, and all of that. But with coal alone, this time they've been able to surpass the 50% threshold.
I mean, the first thing I'd like to mention about Dangote Cement is that it's interesting to know that in spite of the growth they recorded in their top line, they were able to post that growth, notwithstanding the drop in volume. The volume they sold in unit times dropped from 18 million tons to about 16 million tons. But the reason they were able to increase revenue despite the drop in volume is because there was increase in unit price over that period. Now, Dangote Cement being a company that benefits strongly from scale, from economies of scale, because they have the capacity, it has the capacity to produce and to reduce its per unit cost. So going forward, a combination of that with the, what's it called, with what you just brought in, coal locally, is just going to increase the efficiency the more, both on the income side and on the expenditure side. So it's going, basically, I see the possibility increasing going forward.
Let's look at Lafarge. What did you make of Lafarge? That's a company that is also doing rights issue this time of about 132 billion naira. It's also floating a CP, commercial paper, on FMDQ of, I think, 60 billion naira or thereabouts. What did you make of all of these developments coupled with the earnings?
I see a challenge in the horizon for Lafarge because getting debts, CP or whatever, you have to, when you have assets, you must be able to know how to make use of your asset and ensure that the assets you get, your total asset generally are able to generate revenues for you. Meanwhile, you have a technical monopolist in the market in person of Dangote Cement. Now, it will be interesting to see how Lafarge will be able to wrestle part of the market share that Dangote currently owns, and because it actually needs to get more market share. So
it's more about this healthy competition that has been going on.
I think so. So how they will be able to do that without scaling is what I'm looking at seeing.
All right. Shina Lubu, Head of Research at GDL Asset Management, thank you so much for making it down to Capital Market.
Thanks for having me, Temple.
Now, after the break, find out what is changing in registrar business.